Hey everyone, and welcome back to the Shipper Update. I'm Zach Strickland here with Anthony Smith, Chief Economist, to give you your macroeconomic update. Now, normally on Thursday, it is Thursday, right?
It is Thursday.
I see some employment numbers, but today you're throwing me off.
Yeah, I got to get caught up on a few things because, after being gone for about a week, it's just all this stuff you got to get caught up on. So we're going to get started off with core orders here. We're looking at orders for durable goods, excluding transportation. It's going to be one of those areas that you just kind of look at just to kind of see what the pace is, what the tempo is for orders coming into the economy and how are those kind of being filled right now. So we're looking at orders increased, overall manufacturing orders increased 2.2%, so a pretty substantial rise, but some of that's going to be due to this really strange thing called inflation. Not sure if anyone's heard of that one yet, but that is still an ongoing factor. But we are seeing orders continue to flow through. Yeah. We look at things like the ISM, PMI, and those subcomponents there. We are seeing that backlog of orders are still pretty elevated. We're still seeing that new orders are coming in, but when we're looking at those prices, those are still very much elevated, and we're seeing that here as well. So there's going to be one of those quick notes that we have when we're looking at charts like these sometimes, that when the denominator is going to be put in dollars, right, or when it's going to be that main measure, and you're looking at it compared to something like capacity, you have to kind of keep in mind during these times of really, large inflationary times, that there are going to be instances where, maybe we see orders increase and outpacing some of those capacity levels for those tender rejection rates. And so when we're looking at that, that's going to be something to keep in mind. If you're seeing some of that outpacing it, inflation could play a role there. And so that's going to be something to keep in mind. But we are still seeing that there is still quite a lot of gas left in the tank for manufacturing as we continue to move forward. Going into our next chart here, this is going to be another one to keep in mind. Like I mentioned, construction spending increasing slowly but surely, but this is going to be something that's in dollars. And so that dollar can represent a higher level than we're actually going to see on that capacity change and shift there. Right. But we're looking at construction spending. This is one that we heard a little bit earlier in that the news items, the headlines that Michael Vincent and Cindy Edwards went over. There's still going to be a lot of construction spending activity, not just in residential, but non-residential as well. We're looking at warehouse construction. That's going to be a big one. Cold storage over there, so I'm sure Cindy's going to be covering that one in the coming years for sure. Looking at these charts here, it's definitely going to be something to watch closely. We're talking about it earlier on in the year, likely a pull forward in housing with this anticipation of increased interest rates and increased mortgages. We are seeing that the Fed is going for another interest rate hike, 0.75 to 1 percentage point full increase here, I think set for potentially June 1st, I believe. And so we are still seeing that there are more hikes down the road, more anticipation for further increases. That's going to put some of those home potential purchases a little bit forward if they haven't been purchased already.
Yeah, so you're talking about inflation being a big factor in both of these, the new orders and in construction spending. Do we have an inflation-adjusted type measure that we can say, okay, volumes should be about flat, on par, or maybe they're even a little bit down month over month? Have we done any of that yet?
So we haven't dug into those adjusted for inflation yet, but we are still seeing, we can look at the production level. And what we're looking at for things like industrial production, things that are actually produced and shipped, we are still seeing that those volumes are still generally elevated. Okay. So we are seeing that there is not going to be, when we're starting to see that slower growth trend, there's not going to be a hard landing in a sense for industrial production and manufacturing that's seen or forecasted just now, just because there is still so much to get caught up on. Going into our next chart here, Zach, I'm not going to leave you hanging here on this Thursday morning. We do have initial jobs claims, and we did see that there was a substantial tick up to 200,000. Now, typically in the before times, not before times, but during the midst of the pandemic, this 200,000 was like a record target. Low. Yeah. And so now that we've seen that seasonal adjustment, that new figure, seasonality trend that we're having in the initial jobs claims, 200,000 is going to be a little bit of a step up from the 180,000 that was reported last week. So that is a pretty steep rise, not ringing any alarm bells just yet, just because we are still seeing that there are a record number of job openings that have been reported. We are still waiting for the next report for the unemployment rate, but this is something to watch closely because this could be the beginning of a shift here. Zach, we were talking about earlier on how this inflationary period is going to reduce the purchasing power of a lot of consumers. Right. Those companies are going to have to kind of lower some of their openings, some of those openings are going to mean fewer opportunities for those employees to kind of trade up. And so this could be the beginning of a shift. Now it's just 1 week of upward movement.
Right.
I'm not calling it just yet, but that's something I'm going to be watching closely in the job market, is that there is going to be a shift, and that's going to come from these companies that can't produce at the level that they want to produce, and that's going to start to bite into their openings and their offerings.
Yeah, and of course, that'll also combat inflation. A lot of moving parts here. Like, we've got some stuff that's the Fed's doing their part to combat inflation, and this, of course, is kind of a lagging thing that would combat inflation. Well, thank you, Anthony Smith, for that shipper update. We're going to toss it over to Mike Vincent and Thomas Wasson.